All right. So I think we're going to dig into it and get going. So welcome everybody to this inventory planner session covering advanced forecasting and inventory control. So hopefully, if you're attending this, you have a sense of using inventory planner. You've done some sort of forecasting or inventory planning before. We do have a session that covers more of an introduction to demand forecasting and introduction to inventory planner. We'll share that link at the end, just in case you would like to check that out, have a refresher, or share it with your colleagues. That's a regular monthly webinar that we do. You can also find it on our YouTube channel. So that one covers the basics. This one, we're going to dig into it and really get into how you can control your inventory for better financial health and overall maintaining the inventory health of your company. So that's what we're going to cover today. Just a little bit of super exciting housekeeping that we do at the top of every session. So this is being recorded. You'll be sent a recording afterwards. So you will get this as reference afterwards. We'll also put it on our YouTube channel, so it'll be available there. Please use the chat, the Q&A buttons available within the Zoom window. So just let us know at any time. We'll answer those via text. We'll chat you back, and then we'll also read them over at the appropriate time so that we get them in the recording as well, just for the benefit of people watching later. And then, as always, we want your feedback and your questions. We want to know what other topics you'd like us to cover in future webinars. So we're going to have a poll actually at the very end of this session asking what other topics you want to go into for future sessions. If we're not suggesting something that you want to cover, let us know, drop us a line, put something in the chat. We want to hear from you to find out what's most helpful. So our agenda for the day looks like this. First, we're going to talk about establishing a baseline, figuring out where you are now, kind of doing a self-assessment. I think this is helpful because then in a month or a quarter or a year, you can look back and say, okay, here's where we started, here's where things were, and here's the progress we've made. Then we're going to get into more setting goals and planning, figuring out where we want to be, figuring out what those top priorities are. There's a lot that we can tackle, but in the interest of using your time wisely, trying to figure out what those top priorities are. And then finally, we'll get into some more forecasting. So really refining the forecasting methods you're using in inventory planner, some different tips and tricks that we've seen in our own careers with planning and forecasting, as well as what we've picked up and seen from some other merchants since we talked to hundreds of merchants about inventory control. So picking up some tips and tricks there. So to get into it, I'm going to share our first poll here and get some feedback. We want to know from you, what is your biggest challenge right now with forecasting? So really getting at, what was your interest in joining this session? What do you want to tackle? What's taking up your time? What's keeping you up at night? Related to inventory, we can't solve all problems, so we're going to limit it to inventory issues here. So do let us know. So we'll wait for just a moment. We've got the responses rolling in now. All right. So we'll give this another 10 or 15 seconds for people to weigh in. All right, so I'll share the results here. So it looks like missed revenue due to stockouts is the top concern. Then we're looking at being overwhelmed by data. So we're definitely going to hit on refining forecasts so that you don't have those stockouts and miss out on revenue. We're definitely going to get into some metrics and kind of where to start, what to look at. And then we'll also talk about cash flow quite a bit, and launching new products is definitely covered. So we're going to hit on all of these topics, but this kind of gives us a guide for what to emphasize. But definitely please share your questions if you want to know more about something, and we can go into greater depth. So, all right. So we're getting into what is important to your business. So a few things that I want you to think about and This is going to go to sort of your priorities as we get into the next section where we're setting goals and going into some planning. So top one, if you're thinking about cash flow, do you have enough money coming in order to pay your bills, cover your expenses, and make a profit? Do you have margins set up so that you have the fundamentals in place in order to cash flow positively as you're scaling your business? Another consideration can be your growth goals. So what do you want to do as we head into the fourth quarter, as we head into 2021? Are you looking for an annual growth rate of 10%, 25%? How aggressive is that growth going to be for your company? Maybe you have a natural growth trajectory and you're looking to see what you can do to really crank that up. So having those goals in mind and figuring out, okay, what inventory do we need to have available so that we can meet those growth goals? Another consideration and what can be important to your business is risk tolerance. So a lot of times we'll get asked by merchants, what's the right setting here or there? Can you just tell me the answer? And frustratingly, the answer is it depends. And part of this is risk tolerance. So we talk to some merchants who never want to be out of stock. They would rather err on the side of being slightly overstocked because they never want to go out of stock, especially of core items. Whereas we'll talk to others who are operating a very lean business. They're fine with some occasional stockouts. And so they're operating with just a lot less inventory. And so this really depends in your business what that risk tolerance for stockouts and potentially missing some revenue is. Interestingly, stockouts, we often think of missed revenue, but some businesses will actually use this to their advantage to create urgency. So grab the last 10 items now before it's gone. This can be a marketing tactic, but sometimes it's true that you just have a limited supply of inventory. So occasionally we do see it working in your advantage to have a limited supply. So this really depends on the business thinking about what your preference is there. And then the last item to consider here is your brand value. So if you are maybe in fast fashion or you're in a business where you're looking at doing high volumes of products, selling high volumes of products. So this could be for each order, each customer coming through your store, they have a lot of items per order or per cart. Compare that with a luxury brand that may be selling one higher priced item per customer. So selling fewer of those, but at a much higher price. So think about your brand value. This is important when we think about how you're marking up your items as well as discounting when it's been around for too long. So a luxury brand probably is not going to want to get into discounting, but there are some other kind of bundling or upselling techniques that they can do to move inventory out. So keep all of this in mind as you're managing your inventory, where your priorities are, and how much you're getting into your store. Okay. So now that we've talked about kind of your current priorities, where you're thinking about heading, let's think about what the current status is. So here's where we're getting into a few metrics to take a look at right now to figure out what's the state of things. So I think some foundational metrics to really think about are stock turn and GMROI, which is gross margin return on investment. So let's just break down what each of these is. So stock turn is basically I'm investing in inventory. How quickly am I moving that out? How quickly am I getting that return on investment back? So I put $1 into my inventory. I paid $1 to my vendor. I got $2 out of revenue when I sold it to my customer. How quickly are we doing that? So are we turning all of our inventory over once per year, per quarter, per month? How fast is that happening? So that's a good one to keep an eye on, especially if you're really thinking about cash flow. We'll get into some other cash flow considerations. Then GMROI, so gross margin return on investment. This says, okay, we've covered our cost that we paid to our vendor. What's that margin that's over and above that? What's our return on investment? So we spent $1 on inventory. Are we getting $2 or $5 or $10 out in revenue from our customer? What's that return on investment for my inventory? Okay. Then we're going to get into some more cash flow considerations. So a couple things that we want you to think about. What is the value of your inventory right now, both cost value and retail value. So let's take a look at both of these. So cost value, this means what have you paid to your vendors? That's the cost value for all the inventory that's sitting in your warehouse or warehouses. This is something that you're reporting to your bookkeeper, your accountant every month. But also think about if it is, let's say $1 million worth of inventory sitting on your warehouse shelves, that means it's not $1 million worth of dollars sitting in your bank account, okay? So this is money that is tied up in inventory sitting on your warehouse shelves. Then think about the retail value of that. So we're going to get into this. Basil's going to get into open to buy in just a minute, but it's important to think about the retail value because if we have a goal of, let's say, $1 million next month in revenue, we have to have the inventory available so that people can spend their money on it. We can't get to that goal if we don't have enough inventory available for them to purchase it. So keeping in mind both the cost and retail value of your inventory, your current stock is really important. You're also going to think about the cost and the retail value of any on order items. So anything that you've sent a purchase order to your vendor, it is being manufactured, it's on the way. This is really important for cash flow so that you know where your current situation is, what those bills are coming due. This can be really interesting this time of year in particular where you're stocking up for fourth quarter, but you don't have all the fourth quarter revenue coming in yet. So think about that timing, and we're going to get into that more with open to buy. Then we talked earlier about risk tolerance. Where are we okay with some occasional stockouts? Where do we never want to have stockouts? So we're going to get into this a little bit more with ABC class. What this means is we're categorizing our inventory. A class are the highest priority items. They're bringing in most of our revenue. So think about this with the top 80% of our revenue. The first 80% of our revenue is brought in by these A class items. Then the next 15% is B class and the final 5% is C class items. So typically you don't want to run out of stock with your A class items. You might want to put in a little bit of buffer so that you're not getting too close to stockouts there. B class items, you might be okay with an occasional stock out. And then C class items, those can be items that you're okay with some stock outs. You could even look at eliminating those from your product catalog because they might be taking more time to maintain, order, store than they're actually producing for you. So those are going to be kind of your first candidates for some product catalog cleanup. So we're going to get into ABC classes a little bit later as well, how you can customize that with an inventory planner and use that tool and those categories for your benefit as well. Then finally, brand value. We talked about this a little bit. So a couple metrics you may want to keep an eye on are how often are you out of stock? So if you're creating that sense of urgency, you might be okay with some stockouts. If you always want to be reliable, always have those items, especially your core items, you want to avoid those stockouts. So that's a metric you can check out. And then look at your discounts. If you're a luxury brand, hopefully you're not discounting a lot. If you need to move out trendy items or something that's been around too long, then maybe you'll have some more discounts on those items. So those are a few metrics to take a look at to get a sense of the current status of where you are right now, and then you can keep an eye on those things as you're taking some actions that we're going to describe later in this session to really see what your progress is over time. So now I'm going to turn it over to Basil, who is going to go into open to buy a little bit. Hopefully you all got the announcement that we rolled out an improvement to open to buy just within the last couple of weeks. So Basil's going to go through all of that as well as how to use it. We do have a quick poll here just to get a sense of what your familiarity is with open to buy. All right, so Basil, I'll stop talking now and turn it over.
Yeah. Is that what the cute? Okay, I saw a little chat come up, but I think that may have been the poll.
Yeah.
Oh no, just a yay from Michelle. Great.
Perfect. Some real-time feedback. I like it.
All right, Jill, you could see my screen, correct?
Mm-hmm. Yep.
Let's talk a little bit about open to buy. Jill gave us a really good rundown to help get a sense of where you're at today on everything. What is your current stock position? How are you positioned? How are your great items, your A items versus your C items? Kind of getting a sense, a calibration, a self-audit. Where are we? Now we need to figure out where do we want to be? So that's one of the things that Open to Buy can be really helpful with. You're going to see on our left-hand navigation bar a section over here to access Open to Buy. And here, we're going to share these results, actually. So here's what looks like a lot of people have heard of Open to Buy, but haven't used it. So I have good news for you. And I think a lot of our existing users could really benefit from Open to Buy, but just haven't heard too much about it yet. So this is reinforcing. This is a really great tool just to kind of help with your cash flow planning based on planned revenue goals and based on your goals for your stock cover going through the year. I know we had some folks mention earlier just cash flow management being a really important part of the business decision making. So to that point, let's talk a little bit about how Open to Buy works. Now, Open to Buy, it's separate from forecasting and replenishment. And what you do in Open to Buy should ultimately inform the way that you decide to purchase and how you ultimately kind of manage your forecasting and replenishment settings. But this is a great place to start. Now, it's a more advanced tool, but in terms of like a macro strategy, this is a great place to go to kind of get a sense of what is this revenue going to look like? And what is my coverage, and what does that mean that I need to purchase in order to support those goals? So here we are. I'm in our demo store right now, and I came to Open to Buy, and I'm just going to go to one warehouse to keep it simpler, also because our revenue is so great here in the Open to Buy. So I'm going to go over to our Shopify our Shopify warehouse. It gives us slightly more manageable kind of numbers here. All right. So the first thing that we're going to do, you're going to notice this says default here, so we can create different plans in Open to Buy. So I'm going to start by creating my own plan, just a new plan. All right. So if I hit new plan at the bottom, and I'm just going to call this Basil's, how do I spell my name? Basil's plan. All right. So we're doing this for one warehouse. We could create different plans related to different warehouses. Now I can also choose if I want to do top-down planning or bottom-up planning. Now, planning ultimately is going to happen either way, actually at the category level. If I were to click bottom up planning here, notice it actually opens up my inputs at the category level. If I were to do a top down planning, it allows me to put in my planned revenue and cover goals at a total level. But what it ultimately does is if I try to set, say if I set planned revenue here, it's going to trickle it down to the categories based on revenue breakdown by category. And if I try to put in a forward cover goal, as you'll be, and we'll come back to this so you can see exactly how this works. But ultimately, if you set a forward cover goal, we're actually just going to try to set it for every single category. But we're going to check if any specific categories are currently overstocked, in which case we wouldn't recommend Open to Buy for that category. And we look at the next quick category, do this over and over, check if there was overstock, and recalculate back up to the top. So for that reason, I'm going to actually choose to do my plan as a bottom-up strategy. So you can see what this really looks like for one specific category, and then it'll kind of make sense what we're doing for each category if you were to do that using a top-down planning. All right, so let's use bottom-up planning. Now, the first thing we need to do as part of this plan is say, okay, what is our planned revenue goal, okay? So I'm going to hit actions down here at the bottom, and there's a couple things I want to point out here. First, I'm going to look at our category organizer. So this is just, when we roll back up to this total level, and maybe I just want to get rid of some of these categories that, that are just sort of catch-all categories. I don't necessarily need to do so much planning for these, right? So let's say for food, I don't need to. I'll keep men's in here, and we'll apply that. So this will kind of recalibrate and just focus in on the categories. So that's often attached to your product type in your system. So, in our Shopify store, this would be product type is ladies versus dresses. Now, if I came to the other parts of the tool, so say I go quickly just to reports, inventory, KPIs, and how we can break down our reports in a whole variety of ways. So one of those options would be categories. So we can also do kind of different reporting analysis and say, hey, look at the last 365 days in my stock and my sales, et cetera. So that's what we're looking at here over in Open to Buy. Go back to Basil's plan and go back to my Shopify warehouse. So we've kind of organized which categories we want to focus on, the location we want to see. And now I need to input my planned revenue goals. So what I'm going to do is I'm going to seed my revenue from the prior year. And I'm going to say, we're going to actually do a 10% increase this year in our revenue. So that's what I want to plan accordingly. I want to make sure that I can support a 10% increase in my revenue. Now you see that inputted automatically. Right now, actually, it went back to top down. So I'm just going to do bottom up. We could always switch between them within the same plan, which is nice. But I want to focus in on a specific category because it's easiest to see the behavior when you're in a specific category like this. So now, actually, you can see here's my planned revenue. Here's the actual revenue kind of so far. Now, if I were to grab this gear icon in the top right, we can add in other metrics to this table. So if I want to see my actual revenue, for example, last year or last year, this would be 2 years ago. Okay, so we could see, for example, to set ourselves up for our October, we need, last year we did 78,000 in sales, and a 10% increase would mean 85,949. So that's how we're going to actually seed in our planned revenue here. But we can add those in as like a baseline to kind of make sure that it feels good, it feels realistic. But just for the sake of not having too many columns in here, I'm just going to reset it so we can kind of zone in. So what does all this mean here? All right, so I have my planned revenue goals here, and I'm just going to put one into, let's say for September, it's going to be around 80,000 here. We're catching the actual revenue so far this month. So now the next piece that's really critical is just getting a sense of our forward cover. What this means essentially is we're going to see, what was we closed the month of August with 63,496 in terms of stock, and we opened up September that way. One really, really important piece in here is understanding that everything you're looking at is in retail dollars. So we're actually checking what the stock was as of September 1st at retail value. So we took all your stock times the selling price, and then we're going to display it here at retail dollars. It's all apples to apples comparison, so it needs to be at retail dollars to make sense. And then we'll input a margin to give us an open to buy at cost. And I'll show you what that looks like. But let's say, so, based on September, kind of coming into the month of 63,496 in revenue, well, our planned revenue is really high here. So basically, actually, and I think that's why it was just showing us kind of the remainder. So let's say our actual, let's say, we're right now it's based on this analysis. If our opening stock was 63,496 and we were selling through it hot, maybe it's actually not going to be quite this high. I'm going to say 30,000 for September, and then we expect it to pick up in our upcoming months. So, all right, so we're going to end the month, it's still going to be pretty lean here. Actually, it's just looking at our overall revenue. And so the main thing we need to do really is just kind of understand, how do we want to enter the month of October? And I think it's a little tricky because it's the last day of September. So it's going to look a little funky here. But the thing that we really want to make sure we understand is, how do we want to enter the month of October would drive our behavior for the month of September. And it's going to look like that for each month. So if I want to enter the month of October with enough to cover me through the end of the year, say October, November, December, I would do 3 months. All right. So if I save that in, it's going to recalculate. So it's actually going to say, okay, we would still need to buy this amount in the month of September. We got to do it real quick. It's the 30th. But if we do that, we check our opening stock against our revenue for the month, what's kind of been actualized in terms of our sales. And then what additionally we need to buy. If we also had anything on order, or if we received goods, we'd see that here, retail value. We're going to pick that up from POs. So we can see, for example, we have some orders that are scheduled to come in October, November. We convert it to retail dollars, and we're going to consider it as well as part of this to see what's already on order and what's left to buy. But if we buy another 227 at retail, we're going to enter the month of October with 261,000. Well, that is enough to cover 85 plus 90. If you were to add all that up together, what do you get? So 85 plus 85 plus 90, it's going to give us that 260. Obviously, I did some rounding here, but it's going to show you, it would make sure we enter that month of October with enough to cover our needs for 3 months. So if I wanted to maintain that cover, I would just do that. I would make this 3. Now, why doesn't this just say 2, right? I mean, we sold through 1 month. We should end, and it should have exactly 2 months. Well, we already have some purchase orders sitting out there. When we consider that, even if we don't buy anything in October, we're still going to come to November a little bit up. But maybe my goal is actually to maintain 3 months of cover. All right. And now I would just put another 3 in here. We save that in. Well, now we get an open to buy amount for the month of October to make sure we can set ourselves up for November to cover November, December, and January, and so on. Now, with all that in mind, let's say that's great. I know now what I need to buy in October to maintain my goals going into November to meet this 10% increase in my revenue. And my margin is a 65% margin. So what this is going to do is we're going to calculate open to buy at cost based on that margin value. This would tell us as long as you buy another $29,647 in the month of October and you receive it in the month of October, then you would end the month so that you'd set up November 1st with enough to cover you November, December, and January. Now, if we go even a step further here, if I were to grab that gear icon at the top, I'll say add in my average selling price. Okay, so let's say I'm selling I'm also going to add in open to buy at units. So this is another way we can convert that even further to say, all right, if we're selling our ladies items at an average of $15, then we're going to actually divide that out and say, okay, then this is roughly your open to buy at units for the month of October. So it's just different ways of converting down from retail to cost into units because everything else otherwise is going to be here at retail dollars. Now, if you were to try to put in an impossible number, what happens? Okay. So let's say, this isn't that great of a category. I want to be kind of careful with my inventory. So let's just kind of go in, to the end. And we'll say I want to go into October, and I want to grab a category here with a little more overstock, right? So let's check one out here. Actually, there's not a ton of overstock here. Let's just say I tried to make it 0. Let's say I'm planning to 0 out the category. Well, it's not possible. We know that this is going to give us a warning or an error here, and it's going to immediately recalculate for that overstock. It's saying, hey, you opened up the month of September with 1.39 and you sold through all that. And this is the lowest you could possibly have for October, right? So if we try to do that at a higher level, essentially, or let's say we did 3 months here, okay, for ladies. So now we get, much bigger open to buy in September to set us up for October. Well, I can't suddenly make it a 1 month cover for the next month because I've already bought all that extra inventory in the prior month. So we're going to recalculate with this in mind. All right. Now, if I were to do that back at the top level, that we're going to just try to repeat this for every single category. So I could say, all right, let's set ourselves up going into October with a 3-month cover. What do we need to buy in order to meet that amount? If we buy the 227, sets us up with 628,000, covers us October, November, December. That's great. If I try to say, all right, across the board, I just want 1 stock going into November. Again, it's not going to be possible, but we're going to try to set a stock cover of 1 for every single category. And then it's not going to be possible. We're going to get a little summary here. It's like, actually, some of these categories are currently overstocked. We can't set it for 1 for November, but for the categories that we could, there were some that it allowed us. So but for those, we recommended a little open to buy, and then we're going to recalculate. It's actually going to take you back up to 2.163. So it actually did set it for some months. It let us do kind of a lower cover. And if I were to scroll down, we're going to see that behavior for every single month, for every single period. And it would have recalculated for the months where it needed to, and it's going to roll it back all the way up to the top based on reality, essentially. So if you do it at a top-down level, we're just going to try to set that level for every single category, check if there was overstock, and then recalculate upwards as we need to. So that's a quick kind of nutshell on what's going on here with open to buy. And yeah, basically from this point, we're going to figure out how does this tie back to forecasting. Once you kind of have a sense of your plan, like where you want to go based on your revenue goals, and you kind of adjust this, or you're doing it here at the category level, one by one. So how do we use this information and actually inform the way we're going to forecast? So I'm going to let Jill kind of talk just a little bit about just some core information that's really important to understand about forecasting. And then we're going to link right back to open to buy to talk about how you could take this information and then go back to forecasting with all of this in mind. All right.
Sounds good. Yep. We have a question. Maybe you want to jump in on this. It's related to open to buy. So Esther is wondering, what's the difference between spot cover and forward cover?
Great question. And for our existing users, actually, this is a big difference to how it was before. So spot cover is actually looking at your planned revenue for the same month. So let's say like November, for example, and ladies, we're actually going to sell 300,000 in November. Like, let's say this is really driven by holidays. So I'm just going to put some bigger numbers in for November, December, and you're going to see a big difference here between spot cover and forward cover. Now the main difference is, so let's say I want to cover 4 months in November, actually, in this case. All right. So notice spot cover became really high for October. Well, I want to close the month of September with enough to cover me for October, November, December. That's 3 months of cover. Spot cover looks at just the revenue for that month. So it's kind of, think of on the spot. So today, it's like your current cover. If you were to take 635,000, that's really high in comparison to just October's revenue. It doesn't know what's happening with November, December. And this is actually the way, up until a couple of weeks ago, you planned based on spot cover, and you kind of had, it made it a little more confusing. We added forward cover as a way to say, okay, to look at what's happening in the same month with the upcoming months as well, to make sure we're planning accordingly. So it's actually a much more straightforward way to plan, but we calculate instead that spot cover automatically. So instead of inputting it in spot cover, we added forward cover. You plan based on forward cover, and we just calculate on your spot cover instead.
Awesome. All right, we have another question about, oh, the questions are rolling in. This is awesome. So maybe a clarification on this one from Esther. So if you always want to have 3 months of inventory on hand, your forward cover has to be 3 all the time. Yes?
That's correct. Yes. You would maintain a 3-month cover as you go along. It would keep it around there.
All right. Sounds good. Michelle has a question about what happens if within one category, the average price differs greatly. So we worked on open to buy at retail, then added margin to get to cost, then average price to get to units. But what if, that average price is kind of all over the place? What do you suggest in that case?
Yeah, no, it's a good question. So we're going to plan ultimately at retail. You're going to be able to convert that using the margin to the cost, and then using the selling price, we could also convert to units, but it's going to be an averaged amount. This is supposed to be an approximation. This is a planning tool to kind of get a sense, what do we really need to buy? And if there are big differences in terms of the selling price or in terms of the margins, that's where we're really going to need to dig into the forecasting and replenishment piece, right? Now, we also introduced a really cool new feature that we're going to be announcing, and y'all are the first that are going to be hearing it today. You'll notice, and we're going to dig a little deeper into this in a moment, but in our edit, basically, once we talk a bit about forecast settings, we're going to be able to take this information and input it. Say we set up our baseline forecast, we get everything kind of in order the way we want. Maybe, oh yeah, it's not even in our real store yet. It's just in our pre-production environment. But what you're able to take essentially, like let's say we went into this edit forecast section and we roll it up by category. Well, we're going to see like an addition of all of our past sales, say in dresses. Here's all of our past sales, all of our forecasted sales, all the way up, and say, okay, with our plan in mind, we're saying we're forecasting to sell 2,500 units. So we could do an override for the forecast at a higher level and trickle that forecast down to the individual SKUs that are part of the category. Well, we're introducing a new feature where you're going to be able to do this with your forecast revenue. I'm really excited about this.
I'm going to take over your screen so I can show it while you're talking about it. Okay, carry on, but I'll show. I have it pulled up here. All right. So as Basil said, this is something that is not live on your accounts yet. It will be soon. We're still debugging it a little bit, but it's close. So we wanted to give you a taste of this because we think the people attending this session today are going to be most interested in this. So Basil, maybe you want to just pick up with like, okay, we've done open to buy. We've got this information on how much more inventory we need. What does that look like here? So you said, we can come in to forecast override. What do we do with that information at that point?
Yeah, so basically, depending on how we set up our planned revenue and open to buy, there's going to be a really key piece here just related to your forecast settings and just getting all that in order, because ultimately, So, maybe we could talk about your forecast settings for a moment and then come back here, because really understanding the forecast settings is going to be a really critical piece here. Okay, so when you think of your forecasting and replenishment analysis, you can think of it like a 3-tiered wedding cake, essentially, right? So where the first layer of this is we have to come up with the baseline forecast by SKU. And the way we're going to do that is we're going to look at your past sales information. I'm sure many of the existing users, you looked at this a billion times over and over. You could use a recent sales and trends method where you zone in on a specific period of time, look at the last 6 months and make that the baseline of my forecast and kind of catch those recent trends. Maybe we need to zone, maybe we're using a seasonal forecast method. However you ultimately set up your forecast method, it's going to tell us, okay, here's how we're going to look SKU by SKU by SKU, look at what's happened in this particular period and use that as the baseline for the forecast. So in here, for example, we're using a recent sales and trends method. We're going to try to go back to September 2017, or we could change that period, or otherwise we're just going to start with the first date that the SKU sold and use that as the baseline for the forecast. And we're going to check if there's been a repeated behavior in the last 2 months. So that's a recent reactiveness measure to trends. If we saw it increased in sales for 2 consecutive months, we're going to start to incorporate it. If we lifted that number up, it would be less reactive to those recent trends. So there's many different ways you can really zone in and get your forecast methods perfect. Let's say you have brand new items. You can't keep it on the shelf. The last sales method there, for example, would say, hey, look at the last 14 days or the last 20 days, whatever you input here, and make that the baseline of the forecast to be extra reactive. Now we also have a seasonal method. It would look at the same time period in prior years. It's great if items have plenty of history. We have top-down method. If the item itself doesn't have a lot of history, but let's say the category this is part of, it's part of dresses. Dresses has plenty of history. Well, we'd create a seasonal forecast for dresses overall and just give a certain amount of that forecast to this item based on recent revenue within the category, kind of distribute that proportionately to this item. Whatever forecast method you choose, now you set up your default method, every SKU is going to start with that. You can customize it by SKU. So you could say certain subset of items, we're going to use a recent sales method. These we're going to use a last sales method. These we're going to use a seasonal method, et cetera, et cetera. Okay, we'll dig a little into that later as well. But let's say you set up your forecast method, you feel pretty good. We're using our recent sales and trend method here. So go back to edit forecast if you could for me, Jill. Mm-hmm. Now we can take that information and say, okay, generally that feels pretty good. The way we're gonna come up with our baseline forecast, like that feels pretty good, but we're gonna have some expected adjustments. So we could come to this section of the tool and say, all right, that's fine for the baseline forecast, but in the reality is in November, we're doing a big special this year. Now, actually, if you could do it on dresses, just put in, whether we could do it based on units, we could do it based on revenue. Say our planned revenue, we're actually gonna make it 800,000 because of a big sale we're planning to do. Well, great, that's what this functionality is gonna do. You could do it in units today, but soon you're gonna be able to do it based on forecast revenue. So we're gonna give you a little warning here. And now what we're gonna do is we're gonna override the forecast, the automatic forecast that was calculated for November by saying, you know what, dress is actually gonna sell around 800,000. Now we're gonna distribute that forecast down to the individual variants, and it's gonna round up a little bit just because every item ultimately has a different price. So when we distribute that forecast down and multiply it back out by the price, we can only get so close to perfect. We'll be around 99% there. So you could take your planned revenue goals as well, and you could do forecast overrides using those planned revenue goals by category, and then essentially, yeah, you'd see here that we're gonna override those forecasts. It's gonna say, hey, here's what the original was. Here's how we did the override, and then you can take this information back. Now you have your forecast method in place. You've put in your overrides on the forecast, and now you can dig into replenishment and say, cool, what is my lead time if I'm going to place a new PO today and it's going to take 15 days to get here and I want to cover my stock for X amount of days? Well, your forecast is already in perfect order based on your planned revenue. You know how much you ultimately need to buy. So you put in your lead time, your days of stock goals and replenishments, and then you're able to start creating POs and kind of scale it to say, okay, I know that I can buy 40,000 this month in this particular category, and you can kind of really fine tune your PO creation as you get there into replenishment. So this new feature is kind of connecting the dots with the new open to buy feature is taking that planned revenue and being able to pop it back into your edit forecast area. So then when you go back into replenishment, it'll inform directly the way that you decide to buy. I know we have a few extra questions here, so.
Yeah, so just to clarify on that point that you were talking about, Esther's asking about this too. So the numbers from open to buy will not automatically populate in this section that we're looking at with edit forecast. You'll need to put that in at this point, but this is some additional functionality that we're looking at where you can do that forecast override by revenue. That's what's new here. It used to be only units. So it's helping to connect those dots and make sure that your planning that you've done for your revenue goals is going to tie in and be affecting your forecasting and kind of what additional inventory you'll need as well. So.
Yeah, we have a couple other questions in here. So Michael, just to clarify, forward cover includes current month or starts next month? It includes this month. If I want to go into the month of October with 3 months of cover, I have to cover my October, November, and December revenue. It's always going to include the current month. Connie, if your supplier takes 2 months for processing and shipping, and you want stock for 2 months, what would you use for forward cover? Good question. Open to buy, what it is a little tricky because in open to buy, so let's say you're putting in your planned revenue and your ideal forward cover for the month of October. So we give you an open to buy amount for the month of September. Well, whatever we give you for open to buy, whether it's open to buy at retail, open to buy at cost, open to buy at units, you have to think of it as the amount that should be received in that month to set you up by the first of the next month to have you with that cover. So like if you put 3 month cover for October and we're saying, okay, buy X amount during the month of September, receive that in. So by the time you get to October 1st, you would have 3 months of cover. So you do have to take the lead times and everything in mind. Say if you were doing like you're working on your open to buy for the month of December, so you're getting open to buy for the prior months. Well, that's what should be received in those months. So you're gonna have to work backwards a little bit to figure out, okay, when do I actually need to place the order to make sure it arrives then by 30,000 open to buy in December, but it takes 2 months to get that stuff. Well, I got to make the purchase in October so that it lands in December. Hopefully that helps to clear that up a little bit. All right, and I think you answered the last question here, Jill.
Okay, cool, sounds good, sounds good. So in the interest of time, we're gonna focus on a few key things that you can do to help improve your financial health, related to inventory for your company. So we're gonna get into a few things here, but as always, feel free to pop in with questions. We'll be sure to address those. And then hang around for the end. We're gonna be asking you what additional topics you want us to cover. Open to buy is one of those. So if you want us to do a whole nother section, a whole nother webinar related to open to buy, let us know that too. So hang around till the end for our last poll so that we can find that out from you. So a couple of things that we'd like to hit here. So we did talk briefly about ABC classes before, so that's a way to categorize our inventory. So I just want to walk you through, if you haven't already found this, how to customize this within your account. So if you come to account and then settings, and then we're going to come over to forecast. Then all the way at the bottom here, this is where you're going to find your ABC analysis. So you can see the defaults that the system has in here. You can change these percentages. You can also change the reference period. So for example, if you have very seasonal items, especially as we're heading into fourth quarter, it might be good to look at the last 365 days so that you're getting that performance from the last fourth quarter, and you can really see what those top items were heading into the fourth quarter as well, and you'll have those classes that reflect that. So that's one thing you want to think about here. Typically, people will use this as a revenue-based item, but if you want to look at units sold, you do have that option here so that you can see number of units sold. So that's the sales metric within Inventory Planner, and classify it that way instead of by revenue. So those are some ways you can customize that. Then when you're in reporting or you're here in replenishment, there's a few different ways that you can see this information. So one, you can add it as a column. So here we can come in and look at ABC classes. Here, we're gonna see this represented. You can also see this with filters. So I do have some presets here at the top, but also we can find, here's class. So this is what's referring there. And maybe I just wanna see a class, or I wanna see A and B class. So I could show that here. So I can select those, and then I'm just looking at the top 95% of my items. That C class is excluded. So obviously a couple different ways you could set up that filter there, but those are ways that you can use that as a tool. Another tool that you have to classify and segment your inventory are IP tags, so inventory planner tags. So you can use these if there's not a good category or way to view the items that you need just straight out of the box. So categories, will be a really common way to look at your items grouped, or by vendors. Those are really common, but maybe there's another way that you want to see them. So you can view by IP tags, and you can assign these here using bulk actions. So we can select items here, we can come down to the bottom and add our IP tags. Now, one thing to be aware of, that by default, IP tags will apply at the product level. So if you've selected the green dress, it's also going to apply to the blue dress and the red dress. Okay, anything that's within the same product, so the parent-child relationship. Get a hold of us, contact us down here in the chat within your account if you want that applied at a variant level instead. So then only the green dress is selected. We can update your account settings for you. So one really important thing to be aware of as IP tags are used by default versus some configuration that's available too. So those are IP tags. That's something available just within Inventory Planner. It will not push to your platform. You may also see, based on your platform, tags. So there's tags and IP tags. Tags are coming in from your platform. So for example, Shopify users will see that. So you can have both of these, but IP tags are nice because in some Shopify themes, those tags are going to be visible to customers, and you don't always want them seeing what those tags are. So you can just have something within the system here to manage your inventory. So that's one thing that you can be aware of there. Let's get into a couple other things, that you can do to improve the inventory and the financial health of your store. So one of those is taking a look at stock turn. So this is one of those metrics that we looked at the top that is a good indication of, okay, how quickly are we turning over or bringing in and then moving out our inventory? How quickly is that happening? So a few different things to take a look at here in terms of forecasting accuracy. One of these will be to take a look at stockouts. Now, considering stockout history is a really fundamental and foundational idea within Inventory Planner. Hopefully everybody on this session is aware of this, but I would, it would be a massive oversight if I didn't mention this, because it really affects your forecasting accuracy a lot. So let's talk through what this setting does to help improve your forecasting accuracy. So I'm here in account settings. I came over to forecast. We're talking about this setting right here, use stockouts history. It's enabled by default. What this means is, what we're trying to get to with your forecast is, how much do you sell when an item is available? And what this indicates is, when you run out of stock, the item is no longer for sale. So if you do allow overselling, then you'll want to disable this item. And that does two key things. One, it affects the sales velocity of your forecast. So with this enabled, we're looking at how many days were you in stock during that month, and then how many units did you sell over that time. Or if you're using the last sales method, we're looking at the last 14 days, but we're going to look at the last 14 days in stock. So your last 14 days in stock could have happened over the last 90 days. We're going to go find those days when you had stock and see how much you sold during that time. So this is a really key consideration. If you have this disabled, you do allow overselling. As I said, this will affect your sales velocity. So it looks at the rate of sales, so forecasted demand. But then also it looks at replenishment needs. So with this enabled, we assume you stop selling at 0 stock. But if you allow overselling, then the forecast needs to know that you're going to continue selling, even if that's during your lead time, when we normally think, okay, there's nothing to sell, so don't take that into consideration. We do need to know, okay, you're going to continue to sell. This will add to the replenishment recommendation. So please be wary of this. As always, this is your account setting, your account-wide settings. You can make exceptions for a few key items. You can always come back to replenishment, use your bulk actions and set exceptions to your forecasting methods and settings here. But that's just a really important and foundational idea within Inventory Planner. Another key piece of information is that Inventory Planner on your first sync does bring in your sales history, your product information. We don't have a way of getting your stock out history as of that initial sync with your platform, but we do accumulate that over time. So this stock out history will apply as of your account creation date or the date you're connecting a particular platform. So be aware of that. If you do have your stock out history available in another system, you can import it to Inventory Planner. That'll help with your forecasting accuracy. Okay, another idea that we want to get into with forecasting accuracy is days of stock. Now, hopefully this is one of the very first things that you took care of in your Inventory Planner account in setting up your days of stock. This indicates when you place an order and that new order arrives, how long do you want it to last? Thinking about this, this is also your planning period or your ordering frequency. So this takes a look at, oh, sorry, I've got to, here we go. Okay, you may ideally want to order every 30 days as an example. Okay, so that's going to be your purchasing frequency. That's how long you want your inventory to last here. For those A-class items or your highest priority items, those core items you never want to be out of stock, or you want to plan due to shipping problems that we're seeing, I think, worldwide right now, where supply chains are pretty unreliable, or your supplier, you need a little buffer worked in here. We suggest using the days of stock field. So we are frequently asked about safety stock. There is a safety stock field. We don't encourage using that. It is better to use days of stock. So let's say I want to plan for 35 or maybe even 40 days of stock as my buffer. Here's why this is better. If I set my safety stock at 100 units, but I see tremendous growth within my store, right? If everything's going well, we're going to see a lot of growth. That 100 units is not relevant anymore because I'm selling so many units, it doesn't provide a true buffer. However, my days of stock is tied to my stock or my sales velocity. So it's always relevant to what my actual sales are right now. You're not going to have to go back and maintain it, and it's going to be relevant to how much you're selling right now. So that's why using days of stock is good to create that buffer. Now, there's another interesting consideration with days of stock. So we talked at the top about, keeping an eye on what your inventory cost value is, your stock cost is. So this is, again, the cost value is what we pay to our vendors. And looking at this overall. So one great success story that we saw with one of our merchants was they took a look at what their stock cost was. And let's say it was at $5 million. Okay, they're high velocity, really trendy items. They're going through a lot of units. And they saw their stock cost was at $5 million. And they said, okay, well, that feels like a lot of money that's really tied up in inventory, that we don't have that money in our bank account right now to invest in marketing or invest in our most profitable, productive inventory. So what they did is they actually lowered their days of stock. So let's say they started out at 30 and they dropped that to 25 or 21 days. What that does is make sure that they're running a leaner operation. They were able to drop their stock cost by $1.5 million within 6 weeks. So really rapid results for what they saw. This does mean operationally that you're going to be placing a lot more purchase orders that are smaller, and you're going to be placing them more frequently. So there's an offset in terms of, how on top of it are you with your purchase orders, placing these absolutely when they need to, so you don't run out of stock. This approach is not going to be right for everybody. It could be that you have high shipping costs per shipment from your vendor, in which case you're not really saving any money because you're adding to your landing cost. So it's not always the right move for everybody, but if you look at that overall stock cost and it's too high, you're tying up money, you're looking for greater liquidity, better cash flow, this is something to consider. Can you operate a leaner operation, less inventory on the shelves, but ordering more often? So you're lowering your days of stock here. Okay, I know we're getting really tight on time here. So I just want to hit a couple other things. We spend a lot of time on replenishment and forecasting, getting in new stock, avoiding stockouts. Please don't forget about reducing overstock. It's far less sexy and exciting than handling replenishment, but in terms of improving your stock turn and your sell-through rate, this really can have a huge effect. So when I was a merchant, we were able to improve our stock turn by 8x. So meaning we were moving inventory through 8 times as fast. And a lot of that was due to getting rid of overstock. We just had stuff sitting around forever and it's got to go. And so it's not earning you any money sitting in your warehouse. Get it out, get something out of that inventory so that you can invest it and be more productive within your store.
Hyper speed tip on this. And sorry if you already mentioned this,
Nope,
Jill, but we have a free connection with Google Analytics. If you were to connect Google Analytics for free in your account settings, it'll show some labels. You can see on the right, you're going to get some information that's saying, hey, this is a new product. That's possibly why it showed up on here. You'd also see some labels about page views and conversion rates. So you might kind of get a sense, oh, why is the conversion rate so low here, et cetera. So that's a free connection. Definitely suggest including that. And then you'll be able to also add those columns, page views and conversion rates, to your KPI reports and your replenishment table as well.
Yeah, awesome tip. Thank you so much. All right, so we just have a couple of minutes left. So I'm going to share our last poll while we are going through kind of new product launches here. So let me launch this poll here. So we're going to ask you about what topics you want us to cover in the future. While you are answering that, just want to briefly touch on new product launches. And obviously there's a lot that goes into this, but a couple of tips that we can share with you. So within your inventory planner account, if you come to reports and then assortment, this is my favorite place to go to get a sense of, okay, it's a new product. We don't have a sense of, how this is going to sell, but think about, what do we already sell that's similar by category, by vendor, by tag? What's in common with this item? So here in assortment, I can look at my different performance by categories. I could come in here and filter by vendor. I could bring in tags. So we're narrowing down and looking at that performance for existing items, what people have already spent their money on, to get a sense of that. Another great thing that you can do in the assortment report here is come to option sets. So these are any of those drop downs on your product page, color, size, flavor, any of those kind of drop downs, and you can see what the performance is across those different items. So here we're just going to quickly come into color to see what our performance is here. And here we can see, okay, we're bringing in the most revenue from silver. And again, I can bring in my filters and look at, okay, within one category, within our dresses, what does that performance look like? And that can help with that initial order that you're looking at there. I know that we're almost out of time. Basil, do you want to just walk through kind of some other new product tips that you have as well?
Yeah, sure. Feel free to end the poll at any time, or we can keep it going here at the end. We have a few more
Cool.
that are kind of trickling in.
Okay.
But I love the engagement on that. That's great. Okay, so I'm gonna move hyper speed on this one. All right, guys. So something to keep in mind with, oh yeah, let me share my screen here.
There we go.
Okay. All right, so thank you for everybody again for participating in that poll. So let's say with product launches and just talking about forecasting, especially we've run into this with a handful of customers recently who are bringing in a lot of new products. So I want to show you just a couple things real fast here. So one, especially if there's a lot of seasonality. So one feature you're going to notice, and I'll show you just here for one item as an example, if I were to click into this details icon, not only can we customize forecast settings by SKU, if I were to turn on custom settings and change the method, as we discussed earlier, but all of these methods really are only as good as the history that's available. And so what's really important, if you're bringing in a new item, this combined sales stock feature allows you to copy history from another item over to this item. So let's say, this new item we're bringing in performs kind of similarly to this item. It does about, 85% as well. So we're going to copy 85% of those sales over, and then we're going to stop combining the sales after a certain date because we'll have enough history on the new item to use it for forecasting. So this can be really useful for a new product launch, especially if there's no history whatsoever. We would suggest using this combined sales stock method and then stopping that combination after a certain date once you can use the new history. I would recommend that for anything that has like no history whatsoever. If you have a pretty seasonal business, something you might want to consider here. So if I were to go back to my replenishment table, and I'm just going to quickly add a column here. It's the age column. This tells us how old items are. So one thing I might do, for example, like a top-down method we talked about earlier is a great way to get a seasonal forecast for new items, but we want to have at least 60 days of history ideally, because what we're going to do is check how did this item sell in the last 60 days as part of that category and create a seasonal forecast using the seasonal behavior and give a certain percentage to this item based on those last 60 days. So we can use this to say, all right, I'm going to grab anything with, let's say age. I'm going to add my age in days filter, anything with 60 to 364 days, for example, with that much history. Great. So it's going to just limit down to those items. And these might be items that I decide, let's grab all of them, use bulk actions and set these to a top, override the default and use a top down method. Because I have enough history, but I don't have a year. So this would give me a good seasonal forecast for anything kind of in that ballpark. Anything under 60 days, say if I change this filter, we go 0 to 59, this would identify anything that's so new that you might want to use that combined sales stock feature for these items until you have at least 60 days. And then once you have at least 365 days, and then, until whenever, we could use a seasonal forecast because we have plenty of history for these items at this point. So since we've seen a lot of that in recent months, so I wanted to mention that quickly as a method for handling new product launches as well. Okay, do we have anything else? We do have a couple questions here.
Yeah, so I was just typing in some things there. So just a couple of links in the chat. I've put the registration link to our intro to demand planning and using inventory planner webinar. So that link's in there. You can share with your colleagues. I also put the link to our YouTube channel. We did have a question from Kaylee about if the session will be emailed. Yes, this is recorded. It'll be sent to you within the next couple of days. So you can check that out.
Mariah, yes, yeah. We also had a question from you about age. You can always check our glossary of terms. You're going to find it. There's a chat widget at the bottom right of the tool. I might as well just quickly show you here. So if I were to go to that widget, hit glossary of terms, and then we just check that out. So if I were to search age, it'll tell you actually here's the length of time since the first order date. If there's no sale, then we're going to use that created date instead. So that's a way that you can look at that as well. But anytime you have questions about columns or filters, always recommend checking out this glossary of terms. It'll really dig deep into those explanations.
Awesome. All right. So we'll be emailing you a link to this. If there are other questions that we didn't cover in this session, please feel free to reply to our email. We'll be glad to get back to you. As always, we really appreciate your participation. Let us know what other topics you want us to cover in future sessions. And we really appreciate you joining us today. So have a great Wednesday, everybody.
Thanks, Al. Take care.